Hello investors and future investors, welcome back to the channel. In today's video, I will show you how to trade options with as little as $100 and how this can be done consistently over time to capitalize on small gains in order to grow your small account. So, if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies, dividends, and other investments that can give you consistent revenue in order for you to grow your small account. We can all make weekly revenue if we want to. So I'll definitely show you what I'm doing on my end in order to generate revenue. Now, all I ask in return for this free content is an early thumbs up by you hitting the like button and consider subscribing for more ways to increase your investments. Welcome to Investment Gains. Let's get right into it. Hello future investors and traders, welcome back to the channel. Today's video will showcase a two-leg option strategy that when used correctly and consistently will be able to grow your small account. Now this strategy is perfect for today's volatile market, and anyone looking to come back from major losses or anyone looking to grow a small account can also benefit. Now this two-leg option strategy is known as the call credit spread and can be used effectively today to realize gains. So let me show you how. So let's get in depth with the strategy. So the goal is to use only $100 and the outcome is to make 15% return or a flat $15. So here goes. Let's get into the options change for today's video. Now for today's video, we're going to be using the SPDR ETF, ticker symbol SPY. Let's go ahead and go to trade SPY options. Now, the reason why I like using the SPDR ETF or SPY is for two main reasons. The number one reason, it has so many dates for expiration, so you could literally trade this thing more than 5 times a day. The second reason is that this can be traded 24 hours. That's correct, 24 hours. I will make a future video on how this is done overnight as well. But for now, we're going to focus on showing you guys how to maximize on the call credit spread. Before we get into this example, I want you guys to know there's 3 ways in which this trade could go. The first way is that you could obviously win the trade. The second way, you could obviously lose the trade. And the third way that no one talks about, we definitely get into that. Now on each one of these ways, there will be some benefit for you. That's why most of my option strategies here are always geared towards getting revenue. So let's go ahead. Now first of all, we're gonna go over to sell and call, and we're going to choose our expiration date. We're going to go with the expiration date of July 13th. Now this is my strategy and my example. Feel free to do your own due diligence before investing. So what I like to look for is a chance of profitability or 80% or higher. So that's going to give me the $446 call. Now the $446 call with a about 80% chance of profitability is going to pay me 73 cents. Now the reason I am going to be paid is because I'm actually selling something, hence a sell call. Now if you go over to your right hand side, you're going to see up here it says covered call. This is the first leg of this two-leg strategy. Now if we were to pause this trade right here, we would be paid $73 or 73 cents. Each option contract is multiplied by 100 shares. So 0.73 multiplied by 100 will give you $73. But that's just the first leg of the option strategy. Now, let's go ahead to the second part of the option strategy. We're going to put it all together. Then I'm going to explain the different ways how this could go. So now we're going to go over to buy and call. And now we're going to choose a strike price right above our sell call. So our buy call is going to be the 447. Now with the 447, since we're buying, we're going to have to pay 0.53 or $53. Once again, each option contract is multiplied by 100 shares. So you're going to go ahead, we're going to click into it. And now you're going to see the top, it says call credit spread. If you were to implement this strategy and it does not say call credit spread, I advise you go ahead, start from scratch and do it again. The best way to learn option is to get down and dirty with options. Practice, practice, practice. Now, for this call credit spread, once we do this strategy, automatically we will be receiving $20 into our buying power. Now our goal is to get to $15, but $20 will definitely take that. Now I'm going to go ahead, I'm going to hit continue. We're going to choose the amount of contracts we want, which is 1, and we're going to go to review order. Now, like I stated previously, once we do this order, we're going to get revenue right away, which is going to be $21. Now, the reason why this is fluctuating is the market is pretty much still open. Now, that minimum credit we receive right away, that money is ours to keep no matter how this trade goes. Whether we win, lose, or the trade goes to the middle, that money is ours to keep no matter what. Now, the criteria for you to do this trade is that you will need to leave a collateral. Now the collateral is going to be $100. Hence I said that in order for you to do this strategy, you need a minimum of $100 to get going. Now 21 divided by $100, if you were to win this strategy, you would be making automatically a 20% gain right off the bat. But let me go ahead now and show you the 3 ways in which this strategy could go. So come expiration date of July 13th, if SPY share price is below $46, then that's what we're going to consider a win. That's going to be a win because not only do we get to keep our minimum credit of $21, we also get our $100 collateral released back to us, and we could go ahead and keep doing this trade again and again. Now, the other way this trade could go, once again, come expiration date on July 13th, if SPY is trading at any price above 447, then that is a loss. That's what we consider a loss. Now, although it is a loss, you still get to keep your $21. That is yours, like I said, no matter how this trade goes. And now you lose your $100 collateral, but the total loss would not be $100. Your total loss would now be $100 minus your minimum credit. And in this case, it's going to be $79. So you only lost $79. Now, here's the third way in which this trade could go, which everyone always forgets to mention, and it has happened to me a couple of times. Come July 13th at expiration, if SPY is trading anywhere between your spread, which is 446 and 447, then once again, you keep your minimum credit, but now your entire collateral of $100 is not taken away from you. You do get a small portion back, which is a win in my book. Now, this is called the call credit spread. Why is it called a call credit spread? The number one reason is that once you do this strategy, you're going to receive money, which is a credit. That's one part of the option strategy right there. The second part is that this option is a spread. Let me show you the spread. So the difference between 446, which is one of your legs, and 447, which is your other option strategy leg, this here is considered your spread. The most important thing is that your spread always helps you to determine what your collateral will be. So the difference between 447 and 446 is going to be $1. And once again, we multiply that by 100 shares, which is going to give us $100, and there's your collateral. Now, if you were to choose your second leg a bit higher up, let's say 448, then that would increase your spread. And once again, that will also increase your collateral. As you can see over here, it's now gone up to $200. Now, this is one of the easier option strategies out there, and it's perfect for first-time investors or beginners. Now, let's go ahead and do a full example. This literally takes less than 30 seconds. But for this other example, we're going to be using Amazon, ticker AMZN. So let's go ahead to go over to Amazon. Now we're going to go ahead, we're going to open up our options chain, which we're going to go to trade Amazon options. We're going to choose our strike date. Let's use the 14th. Let's make sure it says sell on call. We're going to look for 80% chance of high. That's going to give us 132. We're going to go ahead, we're going to select it. Now we're going to go over to buy and call, and we're going to choose the strike price directly above that, which is going to be 133, and we're going to have to pay 33 cents. We're going to go to continue. We're going to choose the amount of contract, which is 1. We're going to hit review, and there you have it. Once again, that took me literally less than 30 seconds. Like I said earlier, the best way to know options and to keep winning with options is always to practice, practice, practice. So in this case, your collateral once again is $100. Your minimum credit is $16. So here's the thing with spreads. Spreads actually help you to minimize your overall risk. However, it does reduce your minimum credit in which you're going to receive. In my opinion, I think that's a perfect trade-off, especially if you're just getting started with options. You're not at total risk of blowing up your entire account. Okay, so just a few things to note. Whenever you're doing option spreads, always make sure to close your spread before expiration. Don't rely on the apps to close these spreads in your favor. Now, a second thing I'd like you to note is that if the trade is going against you, you could simply roll over your trade, which is going to increase your chance of profitability. Now, that's a bit more complicated, so I'm going to save that for a second video. So remember the point of this video. The point of this video is to invest a minimum of $100 in order for you to get a 15% return or a $15 return, and being able to do that consistently over time in order to grow your small account, which I think we achieved today. Now, we have lots of investment strategies on this channel, so if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, please share this video with someone you think that can benefit from its content. Let's help as many as we can. Remember, a salary will give you a living, but your investment gains will give you a lifestyle.